In 2019, do you think the Iowa economy will A, improve dramatically, B, improve slightly, C, remain about the same, D, regress slightly, or E, regress dramatically? And then, of course, why do you think that? Georgia, we'll start with you.
I get to be right at the podium here. So thanks for having me here today, first of all, Chris. And I would say that the economy is going to remain about the same, but I do have some asterisks for that as well. Earlier this week, we released our 2019 Iowa Competitiveness Dashboard. And so what that dashboard looks at are 5 factors of how the state of Iowa then competes with other states throughout all 50 states. And you'll see within that document that Iowa has a strong economy. Our gross state product increased by $11 billion last year. Our median household income increased by $2,000. Iowa ranks 5th as one of the best run states, and some of the things that they look at under that is our Moody's ranking. It looks at the amount of debt that the state has, how well the budget is run within our state, so all very positive, and the job opportunities that are here for folks within Iowa. However, as Chris mentioned, there's a lot of volatility and uncertainty. So there's one thing that business likes, and business likes certainty, if they can have that. Certainty in the rules and regulations that we have, some certainty in the markets, even though we're not always going to have that kind of certainty. And things such as tariffs and the trade conversations that go on do create quite a bit of uncertainty for business. Manufacturing and agriculture are 2 of our largest industries for our gross state product in the state, and they are directly impacted by tariffs and trade conversation. You know, as well as a lot of the political conversations that are going on today. As you know, the caucuses are right around the corner for us, so we have a lot of candidates who are coming to our state and talking about different initiatives that they have, and sometimes those thoughts that they have could be negative toward business, even though they're not passed in law, but then do create, again, some uncertainty in the environment for business. So again, and threats of a trade war continue to be of concern for business. But as was mentioned earlier by Becky, you know, specifically in the state of Iowa, something that's going to impact our growth for the state and for businesses is just our war for trade, or I'm sorry, our war for talent. You know, we need to get more skilled workers here to fill the jobs that we have with the low unemployment rate that we have that's been mentioned, but we also rank very high as far as the workforce participation rate in our state. So we have a lot of people already working and not a lot of folks to draw from. So I think our economy is going to continue to be strong like it was last year, but there's a lot of uncertainty and a lot of things that will impact it. The potential of it as being as strong as last year, which is why I'm going to say remain the same.
Dave?
You know what, I'm going to be a little optimistic.
You're going to be optimistic?
I'm going to be optimistic. I know I've shocked Debbie. and I'm going on the improvement that I've seen in the economy in the last few months. During the middle of 2017 through the 2018, Iowa's economy on an annualized basis, continually measuring it, was growing at about 0.5%. It was stagnant as could be. In recent months, it's improved. It's growing closer to a little bit over 1% at an annualized rate. That's a pretty good clip for Iowa right now. That's a pretty good clip. We've had a recovery in our manufacturing sector that's absolutely shocking. It has grown back now to nearly the level of employment it was prior to the recession. No other state can brag that that's happened. Iowa stands out. We had really, really good employment over the last 6 months or so in the construction sector, transportation and warehousing. The business, finance, professional services parts of our economy are also growing. They look good. If I look out across Iowa, and especially if I look at the metropolitan areas, I see a lot of dynamic growth. I see expansion. I see a lot of new development. Not all metropolitan areas. Actually, just 3 of them are really growing rapidly. A couple are growing in the middle level. You guys are growing rapidly, just so you know. And then a few of them aren't doing so well. So if I put all of that out there, that looks good. That looks good. And by the way, those jobs, manufacturing, construction, transportation, and warehousing, those kinds of jobs are good middle-class jobs, and they're generating decent incomes. And if I compare the growth in employment with the areas that lost, some in the service sector, accommodations, and retail, the average earnings of the gainers are much stronger than the average earnings of the losers. So again, it's a positive picture for Iowa's economy when I look at it that way. But if I pull back a little bit farther and I start looking out across Iowa, I have micropolitan cities in Iowa that are not doing well at all. They haven't recovered the employment from the recession. They're still struggling. 10 of the micropolitan counties out of the 15 are contracting right now. Only 2 are growing faster than the state average. Fairfield, Jefferson County, which we never try to explain, and North Sioux County, and one other, Dickinson County. Everybody else is struggling. And if I get at the balance of the state, it doesn't look good as well. And then I add the layer over the top of that, the immense pounding that the state's ag sector has taken, especially in the last 6 months since these trade activities accelerate, and the amount of stress, financial stress and emotional stress and regional stress that the ag sector right now is having to absorb is the one thing that's going to temper that. But overall, our state is expanding from what I can tell, and that's a good thing, and it's a good sign from what I can tell reading the numbers.
Eric?
I was counting on Dave to be the bear today, so I guess somebody's got to take the punch away a little bit. I'm going to go with regress slightly, and I take a different perspective certainly than I think a lot of the economists on at the table. Our firm has a wonderful opportunity. We work with a lot of executives across the industry landscape. Most of our business being in Iowa, so fairly uniquely positioned. And I always tell people, what's the market going to do next year, or what's the economy going to do next year? We have a pretty good crystal ball for the next 6 months. And what I'm seeing is what I've seen is a lot of the same things that Dave has seen. And I would tell you 2018 was like a confluence of about everything really could happen. Almost did, again, outside of the trade wars. We'll talk about that in a second. So I think 2018, I would underscore everything we have if I went back 6 months and I was speaking back in June or July. But I sit here today and I see a lot of concern right now because when trade restrictions are announced, when tariffs are announced, it's a lagging thing. So it takes a while for those increase in costs, essentially, if we're kind of inputting tariffs, to follow through into the economy. So it doesn't really feel all that bad. It doesn't really feel all that weird next week, the following week, the next month. But what I'm starting to see, certainly from our clients' perspective, you've done a really nice job of covering ag, because that's one of the things I wanted to say, that the issue with ag, if you look at the recession that we all went through in kind of 2008, 9, 10, and compared that, they call it the Great Recession for a reason, right? Because it was the greatest economic calamity since the Great Depression. Well, I would say if we compared the 1980s farm crisis, kind of being the Great Depression of the farm crisis, we're in like year 5 of a farm crisis. So I'm going to call this like the Great Recession of the farm crisis, and I don't necessarily see a way out. So that's a win certainly in our face, and there are a lot of industries, my own. I mean, we have a huge sector supporting ag businesses. But what we're also now seeing, and this is the new piece to Dave's perspective on manufacturers, Iowa is a value-added manufacturing state. And by value-added manufacturing state, we take commodities, and both grains, we process those into foods, but very importantly, when we manufacture items, we're using a lot of steel and a lot of aluminum. And that's the greatest story never told in Iowa, in my mind. This is really starting to hurt in real time our advanced manufacturing base, especially our exporters, because their counterparts in Europe and in Canada, advanced economies, not China on this instance, in Europe and Canada primarily, where they're competing to sell their products throughout South America, throughout Europe, let me tell you, they have a cost advantage on some of their largest inputs in materials from 20 to 40%, depending on that steel or aluminum. That is starting to hurt. The last thing I'll leave you with, just to give you a perspective, I have large-ish, these aren't billion-dollar corporations, but they're 9-figure revenue companies. For the first time in our career, we do some buy-side M&A, where we are actually now looking at making investments in Canada and or Europe in order, long-term, to say, I'm not really sure where these trade wars go, but to say if we're selling our products to people in those economies, we need to produce necessarily in those economies. So I'm a little less bullish go forward. One more last thing. The irony, though, the irony in all this volatility and the irony in this uncertainty is what we're also finding is really good for mergers and acquisitions. Because the demographics of our state, which is an quote Iowa's an aging demographic, it's a similar demographic with people who own companies. And so I think some of these succession plans that people have been working on, hopefully, you know, if you're a business owner, you have one, or you are working on one, it's kind of accelerated that conversation is what we've seen. So the irony is, even though M&A peaked 6 months ago in my mind, globally, throughout the state, what we're seeing today are people that are like, well, it's still pretty good, and the data supports that. Multiples and valuations are still good, but those conversations are being accelerated. So, Debbie.
Well, you heard it here first. I'm going to actually agree with Dave Swenson. I believe that the economy is going to slightly improve. And that's even against a global backdrop of sharp decline in world trade, you know, the weakness and the unrest of the global economy, the political standoffs that we seem to be seeing around the world, and the obviously volatile markets. And let me going to tell you why, because, do I need to
trade
turn
your
this
mics.
on? Oh.
That one.
Thank you. So, and part of that is, again, what Dave said. It's really, if you look at the bright spot right now in Iowa's economy, it is manufacturing. And I'm going to give you a little backstory of what I see. So, when you look at our manufacturing, and I said this when we wrote the column, is I do think we're preparing for the fourth industrial revolution, Becky. So I do believe artificial intelligence, automation, big data is going to be a big job creator going forward, and I believe we have to make that transition if we're going to be able to compete on a global basis. All of our large OEMs are doing it. What we have to be concerned about as a state is that supply chain and how we help them move forward into this world. And it's very telling when you see people like John Deere at the Consumer Electronics Show, right? And I agree with the director of that show who says every company today is a technology company. So when I look at Iowa, and why I believe this is because of, again, we see people investing in their plants. We see that this trend is taking place, and they're also paying attention to that supply chain. The other thing is, I think, like if you look at our bioeconomy, and there's a lot of manufacturing that's actually included in that platform, when you look at some of the emerging things that are going on, such as precision agriculture, such as vaccines and immunotherapies, both on the human and plant side, biochemicals, medical devices, we can be at the forefront of these new emerging industries. The other thing that was encouraging to me when I was looking at statistics, right, is from 2015 to 18, the number of our students that took advanced placement tests for computer science had increased by 28%. And that is so important because if you looked even, I would say, 10 years ago, what we saw is actually a decrease happening within that. And if you look at all of our platforms, whether it's advanced manufacturing or insurance or finance or the bio, we have to have this innovation thread that runs through it, and we need these people with these skill sets. So, and the other, it's also interesting with trade. So let me just tell you, I think we're going to be up on trade this year. When the final books are closed, we're going to see an increase, I believe, in trade. And what's happening is that our people are finding new markets. So an interesting thing to note is Egypt actually became our 6th trading partner this year, right? Because, again, we have to have somewhere to send our market. The other thing that's interesting is Iowa has the 3rd largest trade surplus of any state compared to Washington and Louisiana, which have ports. So when you take all of this going, then yes, I'm concerned about trade. I'm very concerned about these trade agreements. I'm very concerned when, how Brexit works out and all of those things we have to pay attention to. But in spite of that, we seem to be finding a way. So I'm going to say slightly improved. Oh, you have your own.
Should I take that?
Yeah.
Should be okay on that one.
Okay. So I'm going to go with a lot of other people on the panel and say slightly improved. I think Iowa should, but we've talked about some of the challenges of having the lowest unemployment rate in the country, but it's also great for consumers.
Yeah.
We started, at least at the national level, see a little bit of wage growth last year. We expect that to continue. We expect wage growth to get up to 3.5%. In fact, if you look at non-supervisory manager, non-managerial workers, so these are the workers on the front lines, non-managers, on a non-seasonally adjusted basis, their wages are actually up 4% in December. So we're seeing wages pick up, and we're seeing wages pick up at the bottom of the income distribution. And without a lot of inflation pressures, at least anticipated for the beginning part of the year, that wage growth should translate into real incomes picking up, and that's going to be fantastic for the consumer. I am a bit more concerned about business. We have seen some of the business confidence measures that really picked up pretty significantly up until about February of last year start to decelerate. I think we're finally starting to see some of the impacts. We didn't see the impacts initially of the trade wars, but we are seeing that feed into business confidence. And we, in fact, most recently took down our investment spending forecast for this year because of concerns about business confidence. I think the other thing I'll add, I think that housing should do a little bit better this year. Mortgage rates have come down a little bit. We saw some pretty negative effects coming into housing from the tax reform, so less mortgage interest rate deductibility and less ability to take out state and local income taxes. I think that did affect the housing market this year. That's a one-off, last year. It should not affect housing this year. So I think consumer will do pretty well. A little bit concerned about business investment spending, although there are still some positives for business investment spending, including corporate profits and business